Hello and good evening. Praise be to God. I know wherever you are, maybe you are still hoping and trusting that the election results will be done in a few minutes. I want to let you know that you can just relax. Results will not be done today. I'm very hopeful that maybe tomorrow, it could even be day after tomorrow. But as Kenyans, we are excited that we have maintained the peace. At Occupy today, we are here to do our thing because whether elections are there or not, it doesn't matter, by the way, who wins. Both of them are Kenyans, and whoever wins will be our leader. So we are excited. And at Occupy today, we are continuing with the topic that we began 2 Sundays ago on multiple streams of income. And you are watching the leading Christian business show in this country. Okay? And we are trusting that you will benefit a lot. You will be able to understand and you'll be able to know what it is that will be able to help you and propel you to the next level. And it is coming to you courtesy of Hope TV, East Africa's most preferred Christian television channel. And I'm sure you are watching other programs that are there, very educative, very insightful, and very beneficial. You can begin tweeting at DM Tanki or at Hope TV _KE, and we'll be able to just plug in and help you in some of the questions that you have or in some of the areas that you may need to engage with us with today. Now, last Sunday, we were discussing multiple streams of income, but from the perspective of agriculture. The other Sunday, we just introduced the topic because the whole month of August, we are dealing with this topic. Today, believe it or not, we are bringing you a very exciting topic on paper investments. And I have with me 2 amazing guests. People who are refined, they understand the subject matter, and they have been working on this thing for a number of years, and they know what they're talking about, and they know how you can be helped. And therefore, you can even talk to your friends and tell them there is something exciting happening on Hope TV so that they can be able to tune in and also benefit from what you are benefiting from. I am your host, DM Tanki, and together with me today is Stephen and Elizabeth. We begin with a lady, my brother. We start with a lady. Please, Elizabeth, introduce yourself so that I don't say things that don't exist.
Good evening. Happy to be here. My name is Elizabeth Nkukuu. I'm a chartered financial analyst, and I'm happy to have a conversation on these matters about investments. When COVID happened, a lot of things really were thrown off and people really needed to think about how do I make money or how do I survive in case I am not able to go to work. And this again happened this week. I think irrespective of our political affiliation, this week it's one of those things that has come back to realize, how can I survive if I didn't have to go to work? So this topic is very timely, and it is good that we are going to look at what can we do. So I'm passionate about financial literacy and investing in the capital market.
Beautiful. My brother.
Yeah, my name is Stephen Viraghi, and it's a pleasure to be here with you.
Yeah.
And basically, I'm an expert in derivatives markets.
Derivatives?
Yes.
Okay.
And basically, at the end of the day, we are trying to get alternative income for all the investors on investing in this field of financial markets.
Okay.
Basically.
Okay.
Yes. And I'm a CEO of Derivatives Consultants.
Derivatives Consultants. Excellent. Thank you so much, Stephen. Thank you, Elizabeth.
Thank you.
Welcome to the show. This is Occupy Today. We help you shine in the marketplace because, Jesus told them that you need to occupy until he comes. So it is about occupying as we wait for Jesus to come. We don't want you to suffer, Why should you suffer when the capital markets is there? Why should you suffer when derivatives, and this man will tell us a little bit about derivatives in not too long from now. So we want to get in. If you have any question, please, you can send to at DM Tanki or at Hope TV _KE, and we'll be able to just respond and help you understand some of these things that may help you to make the money that will help you and help your family. So let me start with this man talking about derivatives.
Yes.
So maybe you start first by telling us what are derivatives.
Basically, derivatives are a form of securities. They are basically securities
Okay.
that are traded on a global stage.
Yeah.
And basically, their derivatives are derived from an underlying asset class. So, for example, you have like oil trading currently
Okay.
in a global stage. So you have to come up with some form of agreement, some contract that binds the buyer and seller
Yeah.
for you to perform and deliver on that opportunity.
Okay.
Exactly. So it's buyers and sellers coming together and agreeing on a future price.
Yeah.
Maybe the future price could be 1 year, could be 2 years price,
Yeah.
and then at that particular contract size, you have to deliver. You
Yeah.
have to deliver and to perform.
Okay.
Yes.
So it is like I almost said like gambling.
Yes.
because you place a bet
Yes.
on a future price.
Exactly.
Okay, that's
Exactly.
good. Now,
And the whole thing about this is important to mention. The whole thing about derivatives, futures contracts, and options basically is about risk management.
yeah,
We are trying to get to participants who participate, the investors, the sophisticated investors we are talking about, who can be able to thrive on that risk
yeah,
and basically come out with a gain at the end of the day. They come up with a fantastic gain that you cannot be able to find it locally or
Yeah.
elsewhere.
okay,
So basically, we are talking about calculated risk,
yeah.
whereby with this calculated risk, you of course get the high returns on your investments. Yes.
Elizabeth, a lot of people think that you can't make money from the capital markets or the Nairobi Stock Exchange. I know there are some people who are making money, we don't know what they do, but a good majority of people I have met seems to suggest that it is very hard to make money. What usually is the problem?
So when you come to investment in the capital markets,
Yeah.
you first of all have to understand what is your objective.
Okay,
And based on your objective, you go for the right asset class.
okay,
So if, for example, I want to invest conservative capital, money that I cannot lose, it is my daughter's school fees. I
Yeah.
cannot lose that money.
Okay.
I cannot buy a share with it,
okay,
unless it's a long-term investment.
yeah,
So one needs to understand what is it that I want to achieve and what is the right asset class. So let me go back and define what is an asset class. An asset class is investment with similar characteristics.
yeah,
So there are various. I will start with maybe something like shares.
yeah,
Shares are investments in listed securities. So I'm coming to your company and giving you capital. So that is the share. It's a little bit risky.
yeah.
So I have to understand the fundamentals of that particular company.
Okay,
Then there is now the less risky assets,
Yeah.
which are like government securities, the treasury bills and treasury bonds.
yeah,
When I'm getting into a treasury bill or a treasury bond, I better know that I will be able to wait until maturity.
yeah,
To come up with the illiquidity issue, then there is what we call unit trust or mutual funds.
yeah,
So that is still investment in the capital markets.
yeah,
Because these guys you'll pull all your funds together, your 500, my 1 million, or whatever. Then we invest in the underlying asset class.
okay,
But now I'm able to get my money on the go.
yeah,
So one of the challenges that we have is I do not understand why I am investing, so I end up in the wrong asset class.
okay,
So that then is one of the challenges that we end up saying, like, you know what, I invested in Safaricom, but I can't wait.
yeah,
So I'm forced to sell when the Safaricom share is down.
Yeah,
So
yeah.
every time I talk about capital markets or shares, I'll remember about the Safaricom that I invested. My objective was not met because I could not have the patience to wait. So when you're investing in equities, for example, you have to spend time and do what is called fundamental analysis.
Yeah.
So do not invest through your gut. Let your gut be supported by something.
Okay.
And there is a lot of information that can support that, especially in the newspapers, especially Business Daily. You can get a lot of things that go on for you to be able to make an educated guess.
So a lot of times, Elizabeth, people suffer not because there is no money to be made, but because their knowledge is limited.
You have captured it.
So
Yes.
you get into something, you have fees that you want to use next term, then you go and buy shares in a counter that will, or rather requires that you stay for maybe 7 years to mature or to benefit from it.
Yeah, and that is the biggest challenge that we have in investments, whether we are talking about paper investments, whether we are talking about running a business.
Yeah.
Someone talks, and I keep giving myself as an example. I did quail business. I don't know where the quail went or anything. I don't know.
You did the business?
Yes, I did.
Okay.
I had no idea how that thing works.
Yeah.
But because my immediate neighbor had told me the way she had made money, I was like, okay, how worse can it get?
Yeah.
So I always try to use that example in terms of doing things that you do not understand.
Yeah.
If you get into any investment that you do not understand, it is the surest way of losing money.
Okay.
You do not even have to speak to anyone. Get into a business or an investment that you do not understand, you will lose money for sure.
Okay.
Yes.
Beautiful. We'll come back to that so that we can help the viewer to know exactly how they can be able to make money. My brother, you also deal with foreign
currencies. Yeah, we deal with offshore investments.
Just break it down for us. What are they? So that later we can come back and say, if somebody wants to invest in an offshore asset,
yes,
how should they go about it? So maybe you can just break it down for us.
Yes.
What are those different investment options that are available?
Okay, currently, before I answer to your question, I want to allude to what my colleague has just mentioned about buying something, doing business of what you don't have knowledge with.
Yes.
So you find that currently, Tanki, investors out there, regulators, all the clientele, the stakeholders are doing what we're calling education. There's a lot of education and awareness, to educate the public in general on this particular asset classes we are talking about, because they are new to us.
Yeah.
Probably out there they could be old, but for us Kenyans or Africans here, it's still a new concept that people are trying to buy to get the gist on exactly what kind of expectation. So there's so much awareness in terms of education, and both the regulators are into it, and basically all the stakeholders. So out there is a fantastic job being done out there.
Okay.
To come to your question about the type of investments options that we have.
Yeah.
We have like currencies, as you said. Okay. People are trading in currencies in a big way now.
Okay.
Yes, indices.
Yeah.
And commodities.
Don't assume people know. When you talk about currencies, the only currency we know is Kenya shilling.
Yes.
So you need to help us when you talk about. Just help us a little bit.
A little bit. When you talk about currencies, definitely what comes in mind is forex trading, which is well regulated in Kenya.
Yeah.
And it has given a lot of investors an alternative investment rather than shying away from the traditional investments. So you'll find that there is that niche that people are looking for, and through undertaking some training course, you go to a regulated broker, you open an account with them, register an account, and then you're good to go. You fund the account, you're good to go and start trading because of the skill sets
that you already acquire.
That you have already acquired, that you can use them to participate effectively in the market and get a return. For example, let me just give you
just give me options first. I want to know the different options. Then we'll come. You talked about indices.
Indices, yeah. Indices.
Tell us what are indices.
Indices, basically, they are just like commodities being traded in the global markets, and they are good. They are good asset classes to look at in terms of building your portfolio. And then, apart from that, there's commodities. And in commodities, we are talking about the futures contracts and the options that I talked about earlier. The options, yes. So these are gray areas that needs
a lot of understanding. So those are the offshore options.
Yes, those are the offshore options that basically we have partnered with various players in the market, and they are able to basically advise us on the best facility to use in terms of, at the end of the day, you'll agree with Tanki with me, is the kind of return. The kind of return. And probably currently you're finding that you are giving a risk-calculated return of 3%,
Yeah.
which is very attractive.
3%.
Yes.
Okay, you will tell us how 3% is attractive.
Yes.
When the inflation rate is 6%. So we'll come back to that.
Okay.
Now, Elizabeth, we want to, in the next few minutes that are remaining, we want you to help us know if somebody has 100,000, if somebody has 200,000, if somebody has 500,000. Not a lot of money, but it is also not small money.
It's not little.
What is your advice if he must begin a financial growth, you know, in addition to whatever he makes from his work or from his business?
So one of the things that I'll go back to, what do I want to achieve with this money?
Yeah.
So I have 100,000. This 100,000, I want one to learn and how much to learn about investments.
Okay.
Because it is in engaging the process that I'm able to know what exactly works and what doesn't work. So for me, I always look at it when I'm getting into the capital markets.
Yeah.
Start with the riskless, almost like the most riskless asset that you can get into.
Which is?
Unit. I would say unit trusts.
Okay.
And for unit trusts are grouped funds. So in each of these group funds,
Yeah.
there are very specific asset classes behind it.
Okay.
So for example, I would start with the money market fund. The money market fund invests in short-term investments,
Okay.
fixed income securities.
Okay.
So I'm talking about treasury bills, I'm talking about treasury bonds, I'm talking about government deposits.
Yeah.
I'm talking about bank deposits.
Yeah.
I'm talking about commercial paper.
Okay.
So they are issued by fund managers who are professional, and they have been they are regulated by the Capital Markets Authority.
Okay.
The probability of losing money in that situation is very low. If I have time and I know that I can do my analysis, then I can graduate to do equity investments.
Okay.
That is buying shares
Yeah.
and buying shares in listed companies. The reason why for me you have to have the time, because how do I tell that I'm going to invest in Safaricom or I'm going to invest in equity? Because 100,000 is a lot, but it's not a lot.
Yeah.
I cannot distribute it as much.
Yeah.
So I have to make sure that I'm making a concentrated bet that for sure Equity Bank is going to do well,
Yeah.
or Safaricom is going to do well.
Okay.
And if I'm taking this 100,000 and putting it in shares, then I better be ready to wait for the long term.
Yeah.
So for 100,000, my suggestion is, actually let's even not go to 100,000. Let's start with 10,000.
Okay.
With 10,000,
I like that. We begin with 10,000. So viewer, if you have 10,000, we want to start the journey.
Yes.
And it begins now. So please listen very attentively, because Occupy today is here to help you begin making multiple streams of income from 10,000. Elizabeth, continue.
so you can open a money market account with
Okay.
various providers. They most of the fund managers are affiliated to either a bank,
Okay.
or they are affiliated to insurance companies, and there are some standalone.
Yeah.
So every day, on a work day, you can actually be able to see which fund managers are giving what.
Okay.
So for a money market fund, you'll get a return of between 9 to 10%.
Okay.
And that is, quote unquote, kind of guaranteed, and it's being accruing on a day-to-day basis. So if I withdraw my money today, I deposited it a month ago, I will get my proportionate income of that I have earned during that period.
Yeah.
The reason why for me that is a starting point is because I get to understand how the markets operate.
Okay.
Then after that point, if I already know how the markets operate, now I can go to the second asset class. The second asset class would be things like fixed income deposit and fixed income bonds and bills.
And before you go there, I just want to let the viewer know that, we analyze these things, by the way. And because some people will say, I heard somebody say on Hope TV that you can get 9 to 10%. The reality is that there are about 5 companies that can achieve the 9%. As of now, the others are less. So,
Yes.
so the issue is that when you are going to invest, don't just go because you had. You must analyze, you must see what exactly is the return for this money market fund. What are they promising? What have they done before? So that you don't just jump in.
And it's not rocket science, and the world has, the regulator requires that every fund manager
Yeah.
at least they have the yields results of the previous day in 2 dailies.
Yeah.
So you just need to go to pick a nation media newspaper or take Standard, and you'll see there the returns that are there.
Absolutely.
So you don't even have to do any work.
Yeah.
So after you have understood how the capital markets operate, you want long-term investments.
before long term, you were talking about the government securities,
Yes.
the bonds and the bills.
Yes.
Uh-huh.
So they come in different forms.
Yeah.
So if I know for sure this money, I do not need it for the next 1 year,
Yeah.
I can now put it in a treasury bill.
Okay.
And you have to be sure. Let me be very careful. And even doing treasury bills, they are riskless. You'll not lose your money.
Yeah.
But if you are 6 months down the line and you need that money, you have to go to discount it
Yeah.
at central bank, and you lose your capital. Some bit of your capital will be eaten out.
Yeah.
So you have to be very careful when you're going to government securities as well.
Yeah. Although Elizabeth, there is a 91-day treasury bill.
Yes.
Yes.
So you need to understand, I think what Elizabeth is trying to tell us, you must have foreknowledge so that you know whether you need this money in 3 months,
Or 90.
then go for 91 day.
Or 1
If
year.
you need it in half a year, you go for 180 days.
Yes.
If you need it in 1 year,
To 364.
364.
Yes.
Okay.
So do not gamble with the timeline, because you will end up losing for no reason.
Yeah.
Then that is the short term. You're lending to the government on short term basis.
Okay.
Now, if you're lending, there is now the option of lending to the government for a longer term basis.
Yeah.
So anything from 2 years all the way to 30 years. There is one bond that had been issued for 30 years. I think now it's slightly shorter than that. And then there is, so even in government bonds, they're of two types. There is
Yeah.
a normal bond and there is an infrastructure bond. The infrastructure bond, you do not pay tax.
Yeah.
So you are saving on your interest 15%. So that is the best way to go. However, again, they are long term.
Yeah.
So it's anything between 10, 12 years all the way to 15. And they're issued once a month.
Beautiful. Just help the viewer before we come to Stephen.
Yeah.
How do I invest in these government securities?
It is a pretty straightforward process. You have to go to central bank or any central bank agent
Okay.
and open what is called a CDS account.
Yeah.
If you are in the diaspora, you can actually DHL your forms to central bank for them to open the account for you. Once
Yeah.
you've done that, your banker has to there's a point for them to sign,
Yeah.
so that the day you are successful, they will just pay the money from your account to the central bank directly.
Yeah.
So again, I go back again to bonds, very secure, but you have to understand your term. Yes,
Yeah.
you can trade them in the secondary market, but most of the time, if you do not have a lot of money to ask for a right price,
Okay.
you might end up losing
Yeah.
part of it. But for sure, if you wait to maturity, you'll never lose your money. Yes.
Beautiful. So what we are saying is that you can invest in government securities. You go to central bank
Yes.
or a central bank agent, and they will be able to open a CDS account for you.
Yes.
And you can begin the journey.
And one more thing, most of the banks now, they're actually opening what is called a nominee account.
Yeah.
They can buy the bonds for you on your behalf.
Yeah.
Yes.
Okay. So you can also go to your bank
You can also go to your bank.
to buy on your behalf.
Yes.
Beautiful. We are coming back now to get into the shares so that we know what exactly do I need to look at before I buy a share so that I can win and make money out of it. My brother,
Yes.
let's go to the derivatives.
Yeah, back to the derivatives. Derivatives is an interesting phenomena in the sense that we always thrive on calculated risk, as I mentioned earlier.
Yeah.
And our projections are like our mission and vision is basically to provide wealth creation, to grow wealth. How do we grow wealth for our clients? Those are some of the issues that we look at in terms of long term. Because ours is basically long-term investments. We are talking
where long-term means how many years?
Yeah, we are talking about 3-4 years.
So if somebody has money they can keep for the next 3 years without touching, they come to you.
Exactly.
Okay.
We are the right. You are the right place.
Yeah.
In the instance that we don't believe in quick. What do you call it? These schemes,
get rich quick schemes.
Get rich schemes. Yeah, those kind of schemes. We don't. It's not part of our work.
Yeah.
Because we believe in steady, consistent growth.
Okay.
That's why after 1 year, we can be able to comfortably provide you with a return of 30%.
How much?
30%.
After 1 year?
Yes.
30?
30%. That means Tanki. That means Tanki. What we are saying here is that we are not looking at this growth in a month to month. This month you may get 3%.
Yeah.
The next month, there is no gain. You're on a negative.
Yeah.
But the beauty about derivatives is like we look at the equity. what equity, let's say you are putting in 100,000 as you had mentioned, as an example. We use just 10% of your equity to get the 3%. So every bit of it, the ROI, return on investment, is well calculated at the end of the day, that we cannot go out of our boundaries because of the exposure, the risk exposure that is in place.
You are talking about 3% and talking about 30%.
Yeah, the 3% is per month.
Per month?
Yes.
Okay, so times 12 is 36%.
Yes, so an average of 30%. Because our ROI are not guarantees.
You know,
like we don't guarantee returns.
You know, my brother, I tell people, if you see anybody talking about 20% and more, fikiria vizuri.
Yes.
They may be con men.
No, not at all. Not at all. These are results, and by the way, our results, we don't just post results when it comes to results with our partners. Our partners are the ones who do this work. So what happens is they post results that are audited, fully audited by the big players in the market, the auditors, and they follow the international standard for assurance engagement.
So the 30% is assured?
It's not assured.
Or it is not assured?
It's not assured.
Okay.
But if probably you look at some fact sheet for these companies, you may find that they are providing those levels of returns per year.
You know, when you say they are not assured, it's because there are years that they don't provide anything.
Exactly. So
like you
last year was a bad year for business due to COVID, you realize.
Yeah.
And
so most of these
partners were giving returns of 15, 16% per year.
What do you think about those returns, Elizabeth?
It depends with what the underlying investment is.
Yeah.
And we go back to what he was talking about in understanding the investments.
Okay.
So if, for example, I had taken a bet on the Kenya shilling to the dollar. So there's a currency, Kenya shilling dollar.
Yes.
Yeah.
The Kenya shilling has depreciated by more than 20%. I have not, even if I didn't do anything, I just bought dollars and stayed on them.
Yeah.
I would make 20%. I would have made a 20% return.
Okay.
But so assuming that the conversion is now, I've invested in maybe something like oil as the product.
Yes.
So if the oil prices have gone up by 10%, then I add my currency on the other side, then it's possible.
Okay.
The only challenge is you have to understand the market timing.
Yeah.
And at times you are 100% sure how to hit it all the time.
Okay.
And maybe Stephen, maybe you can let us know, there are those years that you won't get anything.
Yeah.
So that's why he's saying on average you get 30. There are those years that you'll get negative, so the currency appreciates. So if it appreciates, you are negative. So if it appreciates from 100 to 102, you are 2% off.
Yeah.
And further to that, now if the products that you invested in also didn't do so well, then you have a challenge.
Okay.
So even as you invest in offshore, you have to understand, am I investing in which particular product? Am I going to equities? Am I going to the indices? Am I going to the product? So that you can actually understand how is the underlying expected to perform based on the general macroeconomic environment.
Yeah, just also to add on to what Elizabeth is saying, is that if you look at how we achieve these results, there are so many components that are derived together to be able to come up with these kinds of attractive returns. One of them is you look at machine learning. We use machine learning tools. We use the AI because once we have the data, now we can be able now to use algorithms to be able to work.
Okay.
So at the end of the day, you find that our returns are automated. In the sense that everything goes per the AI. Everything goes as per our machine learning. Everything goes to as per our algorithms. So at the end of the day, you find that we focus mainly on automated solutions to grow wealth.
Well, we will come back for Stephen to give us more details on how we can make this 30%. That's what I'm after. And I know the viewers are very interested in that. But for now, we will take a short commercial break. When we come back, we will continue looking at the specifics of what you need to do, how you need to do it, what you need to begin with, and which direction should you need to take so that you can make multiple streams of income, because that is what Occupy today is all about, helping you to shine in the marketplace for the glory of God. So we go for a short break and then we come back. Thank you so much.
Coming up this September, CITAM Springboard Convention 2022 with fresh anointing to radiate God's glory as we reach out to the lost. Mark and save these dates from the 20th to the 24th September 2022 at CITAM Valley Road. The convention is themed Till the Whole World Hears and will definitely revive and uplift your faith. The Bible tells us in Matthew chapter 24 verse 14, and this gospel of the kingdom will be preached to the whole world as a testimony to all nations, and then the end will come. Get ready for the Springboard Convention 2022. You don't want to miss it.
Hope TV is where you look and live, with an excellent selection of the best Christian programming consisting of local and international content of inspirational stories, talk shows, Bible commentary, youth, health shows, children entertainment, contemporary gospel music, extended times of worship, live broadcast, news, movies, drama, Christian ministry programs, and so much more. Hope TV is another quality service from Christ is the Answer Ministries, with over 45% of authentic and credible local content every week. Hope TV is a sister station to Hope FM, Kenya's leading Christian radio station, with footprints across the country. Tune in to Hope TV, where you look and live.
Right, if you are just joining us, this is Occupy Today, Kenya's most watched Christian business show, and it is coming to you courtesy of Hope TV, where you look and live. Now, we are discussing multiple streams of income, how you can be able to make money, you know, those monies that you make without waking up to go somewhere. Because we believe maybe you have a business or you have a job that you do and you need to make extra money. Why? The scripture says, make 7 investments, and yes, even 8, because you do not know what evil may befall the earth. And Jesus told us to occupy. And how do you occupy without money? How do you occupy without cash? So we are discussing how you can be able to make money. And as we said earlier, you can keep tweeting at DM Tanki, and at Hope TV _KE, and we'll be glad to respond to you even beyond this conversation that we're having this evening. And together with me are 2 experts. We have Stephen Viraghi, who is an expert in derivatives. Believe it or not, there are things that are called derivatives, and they can help you make money. And we have Elizabeth, who is an expert in matters capital markets, and you will be able to know and understand and appreciate what it is that you need to do. Now, Elizabeth, we want to understand and we want to know how somebody can make money through Nairobi Securities Exchange. There are very many counters there. You mentioned Equity, you mentioned Safaricom, and several others. What do I need to check as I make investment?
So, thank you. There are different ways that people decide which stocks to invest in.
Yeah.
Some of them would be, what was there, almost like a hot tip. Someone just tells you, know what, this thing is going to do very well because of ABCD, without any sort of analysis. And if I may just take us back, during the IPO, the Kenyan IPO, that's what happened. So people bought the share at 10 shillings, 2-3 days, they were selling it at 30. Then shortly, Safaricom happened. The same thing happened. So the first day, the share price, it was issued at 5. The share price went up, then it went down to 2 shillings. Now we are talking about anything above 30 something shillings. So the that is some of the reasons. That's how people have made decisions in terms of investment. But the right way to make an investment decision is based on what is called a fundamental analysis.
Okay.
By fundamental analysis, it is basic. You have to ask yourself what is happening on a global sense. And based on this global sense, so COVID is an example. Based on what is happening in the macroeconomic environment, what sectors are going to do well?
Okay.
So once I decide which sectors are going to do well, then I ask myself, within these sectors, which companies do I think are better positioned to do well?
Okay.
So I look at the macro level. At the company level, the things I look out for is how is the management of this company? How is it trend? How has it done before?
Okay.
What is the strategic objective? Where are they going?
Yeah.
And that is why every time there are result announcements, maybe for banks it's every 3 months, for some of the other companies every 6 months. People will always have what is called an investor meeting, whereby the management comes and say, this is our vision, this is what we did, and this is how we are going. So you as the analyst, you take a step back and ask yourself, how much do I believe these people can do? Most of the time, if you are a full-time employee, you're full-time employed or you're running your business on a full-time basis, this is a lot of data that you might not be able to follow. So what then happens is various investment brokerage houses or investment banks, fund managers, they actually release reports. So you can actually say that I will just be looking at these reports for me to make the decisions that I need to invest. So that is one of the things that you do. You look at the fundamentals. This is a company that I care for. The other thing is you can actually what is called trend analysis. You actually ask yourself, Safaricom has gone to a price of 40 shillings before or 45 shillings before. It is now trading at 25. Nothing fundamentally has changed within the organization. If anything, maybe it has happened, it is only positive things. Let's say, for example, KCB. Let me use KCB, for example. Before maybe its announcement of entry into DRC, it was trading at maybe a price of 40. So you're like, okay, this price has gone all the way to 40, to 50, to above 50. So most probably, the fact that they're getting into DRC means that they can only do better. So that is called, I'm just looking at the trend analysis and saying, you know what, if they have done this before, they are going to do that. They're most probably they're going to get into that price again. Then finally, you just need to compare. Fine, I like this sector. The 10, 11 banks. Of all these 10, 11 banks, I need to ask myself, which one is cheaper? Not cheaper in terms of a shilling for shilling, whereby I'm saying if Safaricom is trading at, if KCB is trading at 45, equity is trading at 50, I cannot now say that equity is rightfully expensive. That is not how you look at it. You have to look at it from a shilling of earning. So I'm looking at it price per earning. So I need to look at the earnings that they were able to do, then give it per share, and then ask myself which one is cheaper. So there is what is called relative valuation. Look at a price to earnings ratio or a price to book value. So most of the time, it sounds technical. But once you go through the trainings, you can actually be able to see how do I make these decisions? And maybe for the, not to sound marketing, but at least consulting will walk with you that journey to help you make that decision. A couple of other people are actually doing the same. So it is always good, by the time you're investing in the stock market, understand the fundamentals.
But tell me something.
Excuse me.
So how does somebody make money?
So there are two ways that you make money in the stock market. One of them is called capital appreciation. So like, let me go back again to the example I was saying. For Equity Bank, for Safaricom was at 45 shillings. It's now trading at, it went all the way to like 24 shillings a few months ago. So most probably, you think that if I buy it at 25 at 30, it is going to go back to 45. And I will be able to sell it at 45. So the money I will make is between the 26 or 30 shillings I bought at
and the current price that I'm selling it.
Yes, which is the 45. So my bet is I'm buying it now today. I expect it to go high to 45, so I make 15 shillings. That is a 50% return. The thing is, you might not know at what is the time period for me to get from 30 to...
Unfortunately.
Yes.
But capital gains is one way.
It's one way.
What is the other way?
It's dividends.
Dividends.
So dividends is the distribution of profit to shareholders.
So which means when you're investing, you invest in profitable companies.
There are two things. It's profitable and maybe ready to give dividends. Because a company can also be profitable, but instead of paying you dividends, they actually reinvest the money so that the asset base just grows. Yes.
Beautiful. My brother, offshore investments. there's a lot of discussion, a lot of, people talk about offshore. Help us. I want to go offshore. What is the path?
Basically, the path is to leave it to the experts. Because it's a journey. As you mentioned, it's a journey that you need to leave it to the experts for them to basically take you through so that you can be able to understand actually how your investment works.
Yeah.
But thanks to technology is a big advantage to us.
So I go to the expert.
Yes.
The expert is Stephen.
Yes.
Okay, what next?
What next? Now we are working with some partners, both local and offshore.
Okay.
We can be able now to basically judge and see who are the ones who are providing good returns and risk-free, almost risk-free returns. That is key for us.
Okay.
And then now we advise the client directly, like, okay, from our analysis, from our research, from our information that we have, now the best partner to deal with is ABC.
Okay.
So now we take you through the write-ups. We provide you the prospectus for that particular farm. And then after studying it, when you're okay, now we are good to go, we do it online.
Okay, so I give you the money or I pay the money direct?
No, you pay the money direct.
I open an account, or what happens, the procedure?
Yeah. Normally what happens is, let's say you get a prime brokerage firm.
Yeah.
Because we have prime brokerage firms that deal with stocks,
Okay.
indices. It's a one-stop shop.
Okay.
So once you have a prime broker, now you can be able to register an account with them, send the necessary documentation that are required. Once your account is approved, probably now we provide you with a strategy.
Okay.
Yeah, we provide you with a strategy, something called strategy or copy trading, whereby now you can be able now to follow their strategy. Just you plug in, and they can be able now to access your. They can be able now to have direct access with the authority, of course.
Okay.
And then they can be able now to go ahead and trade.
Yeah,
on your behalf.
Okay. So there's nothing much you do?
There's nothing much else we do. Else we just provide information and the right information to the client.
Okay.
And most of our clients, in addition, is important to say, we deal with those clients called sophisticated, qualified investors. Qualified investors.
So am I qualified?
It depends. We have to gauge your risk appetite and then to know whether you're qualified, basically.
Okay.
Yeah, you have to undergo some tests of some form just to see that you are actually qualified to handle this kind of investment vehicle.
Yeah.
And it may not affect your day-to-day. If things, for example, if you undertake a loss, will you be able now to not affect you directly?
Okay.
Basically, yes, that's what we are talking about. People with disposable income.
Yeah. Okay, that's good. Elizabeth, how do I buy shares? You have convinced me, and I think, I want to start. Where do I begin and where do I go next?
It is very simple. The investment is a relationship business. So one of the things that you can do is decide which broker to go with.
Okay.
So all shares must be traded through brokers. Okay. So there are a couple of brokers. Top on my mind is really Standard Investments, Dan Blair, Suntra. There are a couple of them.
Yeah.
NIC, Capital, Kingdom. So you decide this is the brand I care for.
Yeah.
And this is the one I want to invest with.
Okay.
So you can work directly there. They're going to help you with the paperwork. The paperwork really involves opening what is called a CDSC account.
Yeah.
The CDSC account is really what holds the shares that you own.
Yeah.
So the trade will happen. So once you have decided this is the share I want, this is the broker I want to deal with, now you place an order.
So it is me to decide which shares I want?
Yes.
What is the role then of the broker?
It's to execute. You cannot trade on yourself. So they are the market, they are the intermediaries.
Can they help me?
Select. Yes.
Okay.
And that's what, you remember when I talked about market research? They provide a lot of research on each of the stocks. Okay. So they will tell you, instead of buying Safaricom, I think this is better placed because of ABCD.
Yeah.
So they will guide you. But at the end of the day, remember, the decision lies with you.
Yeah.
So once you decide that I want to buy shares, then look at the shares that you want. Then place the orders. They execute. The execution is usually, if you place your order today, maximum 3 days it's settled. So you have to put the money with them.
Okay.
And the same thing if you're selling, it's 3 days and you have your money back. That is one route. The other one is you can, if you are a sophisticated investor, let me just go back to where Stephen is.
Yeah.
So you can afford to have to open a nominee account using the various custodians. Then that is the other way to go.
Okay.
So for the custodian, if you go the custodian route, then maybe you could either have a fund manager managing your portfolio, or you have yourself just opening that account for yourself.
Okay.
That is one of the ways. If, for example, I say I like stocks, but I don't want to go through the shenanigans of selecting which stocks to invest in, then you go through the unit trusts.
Yeah.
The unit trusts specifically for equity. So there is what is called an equity fund. I have my 100,000. I want to diversify, but I cannot afford to diversify with my 100,000. So I just call a fund manager and invest in an equity fund.
Yeah.
Yes, so that way now our 100,000, many of us, is a big portfolio and they can be able to diversify with the risk.
Okay.
So those are the two ways. So either directly or indirectly using your unit trust.
Okay.
Yes.
That's good. My brother.
Yes.
This offshore thing, 30% is very exciting and very seductive.
Yes.
If I can put it that way.
I concur.
I put my money to some company in France,
Yes.
and then they are quiet on me.
Uh-huh.
What do I do?
As they're inquired.
It is offshore, it is in France, it is not in, if I go to the stockbroker she's talking about,
Yes.
I'll just go to the street, one of the buildings in Nairobi,
Yes.
and I go upstairs, the 7th floor, whichever floor, and I ask about my money.
Yes.
Now, hii kitu iko kwa France, offshore iko France.
Okay, now.
So what do I do? What?
Yeah. We have, that's a very good question, because we have a very good mechanism to check on the company profile for that particular partner we are dealing with, that particular company we are dealing with. We look at, we do our own due diligence, DD, just to make sure that everything is right in place and on track. And we're asking ourselves, is this company is regulated also? The regulatory part of it.
Yeah.
How well are they regulated? Because with this, now we add 1 + 1 once we do the due diligence. Now we can be able now to say, this is the right company to deal with.
Yeah.
Even investors' funds.
Yes.
It has some kind of reputation. So investors' funds are safe.
Okay.
Safety of investors' funds are key to us. Because we need to look at who is holding, who is the custodian of those funds.
Okay.
Exactly.
So there is no way of me losing my money, because maybe you remember the BRICS.
Yes.
Brazil, Russia. Now Russia is at war, and maybe I'll put my money to Russia.
Yes.
So, and all of a sudden they are not even responding, or maybe they have been put on what we call these things that Americans do on people. They are put on.
Yes.
They are basically told that you cannot trade with outside. There's a word it just skipped me.
Yeah.
Sanctions.
Sanctions.
Yeah.
Okay.
Sanctions. So they can't do anything. What happens to my money?
Well,
Or it is part of the risk I need to.
because we cannot. But the first things, the countries that are sanctioned, they are already listed. Yeah, it's open to the public.
No, I'm saying because a few years ago,
Yes.
we used to talk about BRICS, Brazil, Russia,
Exactly.
India,
Yes.
China, and South Africa.
Yes.
And now one of the BRIC nations, Russia,
Yes.
has been put on sanctions. And maybe I'd put money there.
You had put money there.
So what remedy do I have? Or I just lose it? Elizabeth, what happens?
Investment is a game of probabilities.
Okay.
So for as long as you are making more right decisions than wrong decisions, then you're fine.
Yeah.
So if you have invested, let's even not go with the BRICS, for example, or a company that is under sanction. I have invested in a company that is not doing well, or I've invested in oil prices, and then it goes against you. So let me take an example of I've taken a forward. A forward means I'm going to buy this stock at a certain price in the future. So at that particular point, the price could be, let's say, for example, I've said I'm going to buy Safaricom at a price of 40 shillings
Yeah.
in the future. So in 3 months.
In a particular future.
That's a particular future I'm talking about.
Yeah.
So come that time, the Safaricom share can have happened 2 things. It's either at 40, above 40 or below 40.
Yeah.
Isn't it? If it's above 40, then I'm fine. I'll exercise my contract.
Yes.
Isn't it? So I can buy it, and I am in the money because it is higher, so I can buy and sell it. If the alternative happened,
Yeah.
so instead of being at 40, it is now at 35, I cannot exercise, right? There's no point. I cannot buy at 40, and I can go to the market and buy it at 35.
Yeah.
So the money that I had invested in that derivative, which is the forward or future, it's actually a future, it actually lapses. So I am out of. I lose that money, and it's no longer there based on the market performance.
Okay. So you lose the money or you make a loss?
You lose the money.
Okay.
You lose the money because what you had opted was, instead of buying a Safaricom share at 40 shillings, I went and bought a future at maybe 2 shillings, 3 shillings.
Yeah.
So it is much cheaper.
Okay.
So what derivatives help is amplify your return or amplify your loss.
Okay.
So what you can only lose is the amount of money per future. Yes. So even without going to the sanctions route, you can actually lose money by just the market standing against you.
Yeah. Okay.
So there is, that's why about investments, I go back to making an informed decision, understand what you're getting into. Is this, if I lost this money, if I went this route, will I sleep in the night?
Yeah.
Because anything can happen in the investments.
Okay.
Just to add on to what Elizabeth is saying about, and to answer to your question also, part of it is that you find there are also risks associated to this particular market.
Yeah.
Maybe there is what we call the country risk, whereby maybe the country is at war, there's nothing you can literally do about it. And then there is the operational risk, probably it's bank-to-bank risk that is causing this problem for you to undergo a loss.
Yeah.
And basically, you find there's always a risk associated to that particular, maybe the company has gone bankrupt also.
Yeah.
Yeah, bankruptcy. So basically, Tanki, you'll find there are all those sorts of risks that once you decide to invest, you find yourself into it.
And what is generally called acts of God.
Exactly.
Yeah. Okay, that is very interesting. We cannot exhaust this topic. I don't know whether you have any closing remarks.
No, my closing remarks goes back to as everybody doing their small little thing to make the world a better place.
Yeah.
So I like the fact that Occupy Today is doing this. As At Least Consulting, we have opted to educate the masses in the little way that we can.
Okay.
So you can, for most of all this conversation actually we are having today, we have done write-ups.
Okay.
If you went to my personal website, that is www.elizabethnkukuu.com, you'll have a lot of this conversation. How do you invest in the stock market, deposit, all that is there.
Okay.
We hold free webinars every Wednesday at 7:30
p.m.
Yes, p.m.
Okay.
So 7:30 to 8:30.
Yeah.
If you want to be part of that conversation, just go to again my website. You'll subscribe and you'll get reminders. This whole month again we're all doing about personal finance and investment.
Yeah.
Then if you want to get deeper into this, we actually have a monthly training. It is called the Personal Wealth Masterclass.
Yeah.
So you can actually subscribe again. We'll take you step by step so that if I want to be sophisticated, it takes a lot of conversations about it. So again, reach out to us on info@leastconsulting.ke. And again, to fundamentally put yourself into a path for financial freedom, I have come up with a book. It's called Thrive. Thrive takes us step by step. How do I decide that? How do I walk the journey to financial freedom? And financial freedom is ability to do what I want to do with whoever I want to do it without money being a significant consideration. Okay. It is possible, especially based on the fact that you have to look at different ways of making money. Okay. So it is doable.
Excellent.
Yeah. Thank you. My closing remarks could be probably out there, just the audience and the public at large, to go more so to learn, to have these skills for their own before investing into these risky risky asset classes.
Okay.
And then also technology.
Yeah.
We thrive on technology.
Okay.
So you always, what can you say? You always ignore the technology at your own peril. So technology is a big plus for us.
Yeah.
And especially now we are asking the people to go there for opportunities that are there and to maximize on technology opportunities.
Okay.
And finally, just to close up, we are based at Pre-Med.
Okay.
We are based at Pre-Med. This is in Westlands,
Yeah.
on 3rd floor.
Okay.
So you can easily contact us and basically reach us on info@derivativesconsultant.co.ke.
Well, thank you so much, ladies and gentlemen. This has been a very interactive, very exciting discussion with these two experts. You've been watching Occupy Today, where we help you to share in the marketplace for the glory of God, and we are trusting that the Lord will help you. Even as we wait for the presidential elections to be completed, we are trusting that God is giving you the peace that you need to make additional money, what we are calling passive income or multiple streams of income. So next Sunday, we are talking about real estate, and we shall be having here some very good experts, and you don't want to miss. This has been your host, DM Tanki, and we wish you a blessed night.